Is business doing $1 million in sales worth $1 million? Well, a lot of people might think that this is $1 million business. Would it actually sell for $1 million on the market? So I had a conversation earlier this week with a business owner, and she's at the restaurant business. And while yes, she was doing about $1.2 million of sales, that doesn't mean her business is worth $1.2 million. Based mostly on cash flow. So a business is not based off a top line. While there are some multiples that you can use, a $1.2 million business where a business doing $1.2 million isn't really worth $1.2 million. And so while this was a little bit frustrating because the business owner had done some research, she'd even looked up some multiples and found that 2 to 3 was normal in her industry. However, she didn't know what that 2 to 3 was based off of, what she was multiplying. And that 2 to 3 is based off of an EBITDA multiple or an adjusted EBITDA multiple. Adjusted EBITDA is just when some of the expenses are added back to the business to show what is truly going to the owner of the business. Now, adjusted EBITDA, or SDE, as it's called for smaller businesses, seller's discretionary earnings, this just goes to show what is actually going to the business owner in profit or in increase. So maybe let's talk about a couple of the businesses that are based off of top line revenue and which businesses are based off of bottom line revenue. Some of the top line revenue businesses would be things like SaaS companies or software companies. Other ones would be subscription-based companies or high growth companies. So companies that are reinvesting over and over. And so it's not fair to base them off of their net earnings or their bottom line because they're reinvesting all of those earnings or what could be earnings back into the business to grow very, very quickly. So one example of that would be Uber. Uber went public in 2019 and it was a unicorn, meaning it was $1 billion company. However, Uber had never turned a profit when it went public. There was actually even some warnings given to investors that this company may never turn a profit because it hadn't before that. Uber finally did turn a profit in 2023, but before then it didn't. And so what was happening is it was investing all of its earnings back into the business to be the biggest player in the world. And so Uber, while it wasn't making a profit, it was growing so quickly that it was worth $1 billion, or at least that's what it was to investors. Now, most businesses, as I mentioned, are based off of the bottom line or the profits of the business. And that's because a buyer is buying it because of cash flow and what they can earn when they actually buy the business. Now, the cash flow is not what the net earnings say on the tax return. We understand that a lot of business owners write things off, or they'll do some things to mitigate their taxes. They might buy a new truck at the end of the year or whatever that might be. And so that business isn't just what the tax returns are showing. We understand that there's other things in there. And EBITDA, it is earnings before interest, tax, depreciation, and amortization. So you get to add back the taxes, the interest, the depreciation, and any amortization that the business saw. There are add backs, is what they're called, back to the business to show what a true adjusted EBITDA or what that EBITDA would be. So let's jump into an example of an Excel. I've made one today of an example based off of another business that we looked at and their margins. This isn't their return, their P&L, because we can't show that, but it's based off of some of the numbers that they're seeing and some of the costs that they incur. So here's $1 million landscape business. Now, is it really $1 million? That's what they're doing in revenue. That's what it shows right here. But are they really worth $1 million? That's what we're going to find out. So this is a landscape business. In landscape, you either have build and design or you have maintenance. This would be more the maintenance side. The reason you can see that is just because the cost of goods sold, they're really not selling much of a product. Whereas in build and design, they'd be selling a lot more of a product. So their gross profit is quite high because most of their expense is in vehicles and really payroll. So we can go down here. They're obviously paying quite a bit in vehicles, some gas or other insurance, stuff like that they're incurring. They've got rent, they got to operate out of a shop. Payroll expense, really high, right? And this is just an example, so these numbers aren't super accurate. You got $40,000 for other stuff. So they have a lot in operating expenses. Now they have depreciation because they have assets or they have equipment that is depreciating. And so their EBIT, or their earnings before interest and tax, is about $35,000, which is not that much. The tax return here would show about $14,000 net after some interest and some tax expenses. So not that much of the business, really not much of to have a multiple off of. And so we need to adjust it so that it shows truly what the business could earn. And so if we go here, we've got $197,500 of what the adjusted EBITDA would be for this example. You have that from your EBIT, earnings before interest and tax, add back amortization, add back depreciation, and the owner actually pays himself about $80,000 in this business. So we can add that back. That'll be our adjusted EBITDA, or SDE, for the business. So if somebody were to buy this business and operate themselves, they could see about $200,000 coming to them. Now they could use this $200,000 and they could pay themselves. In addition to, if they finance this business, they can use that to pay off the financing costs of the business. So kind of cool. That's how a buyer would look at it. Now, what the value of the business would be for this industry, about a 2.5 to 3 multiple is pretty average. Probably this business would sell somewhere between $500,000 and $600,000. As we can see, in like a 2.5 to a 3 multiple, especially if it's a good business that's been operating more than 5, maybe 10 years. Definitely go more than that. Now, if they have really great contracts, and where this is a maintenance business, then maybe they could get even up to a 4 multiple if those contracts are really strong and they won't lose those customers. But most likely this is going to sell between a 2.5 and a 3 multiple, or about $500,000 to $600,000. So is $1 million business, or a business doing $1 million in sales, really worth $1 million? Probably not. It's not a great metric to judge it off of. But if that business, for an example, was doing $1 million and their bottom line, or their adjusted EBITDA, was closer to 350, 400, yeah, probably be worth $1 million. Most businesses we deal with, at least, are based off of the bottom line, or the adjusted EBITDA. So for some metrics of a business, generally, if that adjusted EBITDA is under $250,000, they're going to get about a 2 to maybe a 3 multiple, but probably a 2 to a 2.5. A business that has an adjusted EBITDA between $250,000 and $500,000 will generally get a multiple of 2.5 to 3.5. And then a business that is doing over $1 million in EBITDA will get between a 4 to a 5, maybe even up to a 6 multiple. Again, it just depends on the business, the industry, how good the contracts are, or what contracts they have. And it really comes down to sometimes deal structure that the owner is willing to accept. Are they just wanting cash at close and be done in 30 days? They're probably going to get a little bit less for that business than if they were willing to stay on, work in the business for 6 months, maybe a year, have a transition period, have some metrics that the business is going to hit over the next 2 to 3 years, and have what's called an earnout. We sit down with all of the sellers that we talk to and talk them through these different scenarios so that they know what to look for and what they can expect in selling their business. So if you're wanting to know what your business is worth, obviously multiples are great, but there are many other ways to value a business. So if you'd like us to look at your business and to give you an idea of what we think it would sell for, feel free to reach out. My email will be below, and we look forward to working with you soon.